Welcome back to Explain the Charts, your ultimate destination for unraveling complex market dynamics. Today, July 29th, 2025, we're dissecting one of the most talked about stocks, Tesla, under the ticker symbol Tesla. We'll not only dive into the latest headlines, but also rigorously analyze its charts to uncover potential trading and investment opportunities. Recent news for Tesla presents a fascinating, albeit contradictory, narrative. Reports from Yahoo Finance highlight that Chinese EV giant BYD is already outpacing Tesla, signaling increased competition. Adding to the bearish sentiment, some analysts, like those quoted by the Motley Fool, are even predicting a substantial 70% plunge for Tesla stock. Robinhood's summary emphasized a roller coaster ride for Tesla, noting significant revenue declines and margin pressure after its recent Q2 earnings. However, the visionary Elon Musk continues to assert that Tesla will eventually become the world's most valuable company. Furthermore, ARK Invest's Kathy Wood famously views these downturns as prime buying opportunities, maintaining strong conviction in the company's long-term disruptive potential. Let's integrate these diverse perspectives with the raw price action to paint a clearer picture. Looking at the daily chart, we can clearly see the dramatic movements for Tesla over the past year and a half, starting from March 2024. From a low around $140 in April 2024, the stock embarked on a strong recovery phase, bouncing off critical support. This initial bullish momentum impressively carried it towards $260 by early July 2024, showcasing significant buyer interest and a clear uptrend. A critical point came on July 11, 2024, when the stock experienced a sharp drop of over 8%, directly correlating with news of disappointing Q2 earnings results and concerns over slowing deliveries. This marked a short-term reversal, creating a new resistance level. Despite this major setback, Tesla found robust footing and staged an even more impressive rally in the second half of 2024. This propelled the stock to a new 52-week high near $488 by mid-December 2024, demonstrating its strong growth potential when sentiment is positive. The period following these highs, from late 2024 into early 2025, marked a clear bearish reversal, with the stock sharply declining from its peak, indicating profit-taking and renewed concerns about valuation. We observed another steep decline in March 2025, with a significant 12% drop on March 10 alone, retesting critical support levels around the $220 mark. However, a strong rebound then materialized in early April 2025, notably on April 9, with an astonishing 21.14% single-day surge, illustrating the strong underlying demand and volatility inherent in Tesla. The market seems to be grappling with conflicting signals, constantly reevaluating Tesla's fundamental strength against its high-growth narrative. This constant tug-of-war between bulls and bears is vividly portrayed in these large, rapid candle movements. Identifying key price levels on the daily chart is absolutely crucial for understanding TSLA's potential movements. The $140 to $160 range acted as a strong foundational support zone back in April 2024, proving its resilience multiple times. On the upside, the $480 to $490 level represented a significant long-term resistance zone, marking the peak of the extensive late 2024 rally and indicating a ceiling for price appreciation. More recently, the $220 to $230 range has emerged as a critical short-term support, stemming from the March 2025 lows and holding again in April, forming a double bottom. Currently, Tesla is hovering around $325.59, sitting in a pivotal position. The price needs to consistently hold above the $315 level to maintain any immediate bullish momentum and prevent further downside. This level could be seen as short-term psychological support. Conversely, a decisive break below $290, which acted as a resistance in June 2024 and support in June 2025, could signal further downside towards the $270 to $280 support. Traders should watch these levels closely for potential entry or exit points. Let's zoom in on the hourly chart to observe the most recent intraday price action, focusing on July 28, 2025. Throughout the day on July 28th, we can observe a clear and consistent upward trend, with the price steadily climbing from around $320.80 in the morning to close near $326.19 by the end of the day. This strong daily performance, showing a gain of over 1.6%, aligns well with the news reports indicating that Tesla stock jumped or gained more than 3% on Monday. This sustained buying interest over several hours suggests a positive shift in short-term sentiment after recent volatile periods. However, even within this uptrend, there were moments of slight pullbacks and consolidation, particularly around midday, reminding us of TSLA's inherent volatility. Volume remained relatively consistent during this uptrend, indicating healthy accumulation rather than a short squeeze. For active traders, these hourly movements provide crucial insights into immediate market direction. For the most granular view, let's analyze the 15-minute chart, specifically highlighting a period of sharp volatility on July 24, 2025. Prior to 1327 Universal Time Coordinated, the price was holding relatively stable around the $310 to $311 mark, indicating a period of calm. Then, a dramatic shift occurred precisely at 1327 Universal Time Coordinated, with a large bearish candle indicating a rapid decline from $310.64 to $304.25 within a mere 15 minutes. This intense sell-off, backed by significantly higher volume, was likely triggered by some unexpected news or a cascade of large sell orders hitting the market simultaneously. This price action created a new immediate resistance at $310 to $311. Following this sharp drop, Tesla attempted a modest recovery during the next hour, trying to find its footing around the $304 to $305 range, but the quick decline left a clear mark. This detailed view underscores why active traders must remain vigilant, as such rapid price movements can present both significant risks and lucrative short-term opportunities for those who react quickly. Recognizing these intraday patterns can be the difference between profit and loss. So, what are the primary reasons to be bullish or bearish on Tesla right now, beyond just the technicals? Bullish arguments: Elon Musk's ambitious long-term vision for autonomy, AI, and robotics, as well as Cathie Wood's continued confidence and aggressive buying, signal a belief in massive future growth despite current headwinds. Tesla's proven ability to stage strong, parabolic rallies, such as the 21% jump in April 2025 and the nearly 8% gain on July 28, 2025, clearly shows its capacity for rapid upside. The recent strategic partnerships and potential AI deals, like the reported one with Samsung, could unlock new revenue streams and diversified growth beyond just EV sales. Global push for electrification and sustainable energy also provides a strong tailwind for the company. Bearish arguments: stiffening competition from traditional automakers and emerging EV players like BYD is a significant concern, potentially eroding Tesla's once dominant market share and profit margins. The reported sales plunge over the last 18 months and margin pressure are worrying fundamental indicators that cannot be ignored. Additionally, TSLA's extremely high price-to-earnings (PE) ratio of 180.7, as noted by the Motley Fool, suggests it is significantly overvalued based on current earnings. This makes it particularly vulnerable to sharp corrections during market downturns or unfavorable news. The frequent and drastic plunges seen on the daily chart, particularly those following earnings, highlight its acute sensitivity to negative news flow. Furthermore, any signs of cooling demand for EVs globally could disproportionately impact Tesla given its leading position. To summarize our comprehensive analysis, Tesla is currently trading around $325.59, representing a critical juncture in its recent trajectory. It sits significantly below its 52-week high of $488.54, but also well above its lowest points, suggesting it's at a crossroads. Important price levels. For the bulls, breaching the immediate resistance at $330 to $340 is absolutely crucial for any sustained upward movement and to break out of recent consolidation. A decisive break above this zone could pave the way for a test of $350, then potentially $380 to $400, where it has seen prior resistance. However, the all-time high resistance at $480 remains a formidable long-term target that would require a significant catalyst to overcome. On the downside, critical immediate support levels to watch are $290 to $300, which acts as a psychological barrier and a former resistance now potentially acting as support. Should this level fail to hold, the next significant support is found around $270 to $280, a zone that has seen bounces in February and early June 2025, indicating prior buying interest. A decisive break below $270 would signal strong bearish momentum, potentially leading to a retest of the crucial March 2025 low near $220. Unbiased predictions with likelihood. Scenario 1. Bullish rebound and consolidation. Likelihood, moderate, if positive news regarding stronger Q3 production and delivery numbers or significant breakthroughs in AI and robotics emerge, and the stock can firmly hold above $300, we could see a steady climb towards $350 to $380. The historical sharp rebounds after sell-offs suggest this is always a strong possibility, especially with Cathie Wood support. Scenario 2. Continued volatility with downside risk. Likelihood, moderate high. Given the intense competitive landscape, high valuation, and historical sensitivity to earnings disappointments, a breach of the $290 support is highly probable if current trends persist or new negative news surfaces. This could lead to a swift decline towards $270, and even $220 is a distinct possibility if the broader market or EV sector sentiment weakens significantly. Things to look for. Beyond pure chart patterns, closely monitor Tesla's upcoming quarterly delivery reports for Q3, any new product announcements or technological breakthroughs, and especially market reactions to its competitors' performance. Developments in raw material costs, regulatory changes, and broader macroeconomic trends, including inflation and interest rates, will also play a significant role in determining investor appetite for growth stocks like Tesla. This dynamic environment requires adaptability and a keen eye on both fundamental and technical indicators to navigate. That's all for today's deep dive into Tesla. Make sure to like and subscribe for more unbiased, in-depth analyses from Explain the Charts.